I have to start with the coronavirus. Anything else would be, problematic. You were talking in your press conference just now about the kind of recovery that you expect. Will it be a V-shaped recovery that we see still in this half, or do you expect the damage to continue out into Q3, Q4?
What I said is that we still believe in the baseline of our scenarios, but the risks surrounding this baseline are, of course, increasing, and the coronavirus is one of them. I would expect that we will have to perhaps slightly revise downwards our forecast. But then the most likely assumption is still that this is a V-shaped effect. So the coronavirus will have an effect, but once it is contained, the recovery will, or the normalization will then happen quite quickly.
Do you have to act now with some sort of monetary support? I know that Philip Lane, for example, argues that you need to do that kind of thing preemptively, and certainly the markets have priced in cuts.
I think we have to carefully assess the situation. At the same time, we have to acknowledge that we are confronted with a combination of a supply shock and demand shocks. So our target is a price stability, and this negative supply shock could even lead to a hike in prices. This is one. And then the other question is how effective are our instruments to counter any possible demand effect that we are observing. I mean, the question I asked in the press conference was, are you more likely to go out, eat out in a restaurant if we decrease interest rates, in the case you are restraining your consumption because of the coronavirus? So effectiveness is one point, and then we have to see whether it's demand or supply side effects that dominate. And then you have to also note that monetary policy is already quite accommodative. Liquidity is abundant. Interest rates are already quite low. So to some extent, we provided already some sort of insurance.
So on the issue of supply, I spoke with the CEO of BASF today, and he singled out the supply chain as his #1 biggest problem. They're at the heart of German industry. What tools do you have? What tools does any central bank have to deal with a supply side shock?
Well, it's in a way interesting that you ask the central bank, because there are instruments available, fiscal policy instruments or social policy instruments for such cases, like short-time allowances that we have used in the past and that have proved quite effective. So in a sense, this should be a debate addressed to fiscal policymakers and not to central bankers alone.
We heard from Olaf Scholz on his proposal to lift the debt brake temporarily. Do you think that's warranted here?
Well, I think, first of all, I've only heard rumors about his proposal. It was just reported in some newspapers, and it is completely unrelated to the current situation related to the coronavirus. It's related to the fiscal relationship between the different levels of government in Germany. Especially, he wanted to alleviate the debt burden and improve the fiscal situation of the municipalities. So that's a completely unrelated discussion. And I would caution against undermining the debt brake, because the debt brake has been quite crucial to anchor fiscal policy in Germany, and also to inspire trust in the sustainability of public finances.
So you don't think that the debt brake should be lifted, even temporarily?
I don't. Again, this is a completely unrelated discussion to the current cyclical situation.
Well, assuming we do have a bad situation with coronavirus here, we just had 1,000 people quarantined in a German city on the Dutch border. I mean.
And the question is whether the debt brake imposes any impediment to action. And I would argue no, because there are surpluses that we have been observing in the past regarding public finances. So there's some fiscal leeway, and there's also flexibilities in some of the rules, like the European rules, to react to extraordinary circumstances. So the rules allow for space to act. And in the past, as you might have observed, public spending in Germany has increased. It just was used to strengthen public investment, but also in particular also to bolster spending on social matters.
We have heard a lot of people, including Christine Lagarde, ask for those countries that have fiscal space to use it. And we continue to hear these calls repeatedly. Does it frustrate you if you already think that Germany is doing that?
No, I think it's a situation where you can repeat your arguments and then explain why you have a different view, and also highlight that we have a specific setting in the euro area where countries decided to share one monetary policy, but to have independent fiscal policies, and the responsibility for those is at the national level. So it's a bit inconsistent in that framework, of course, to ask countries to spend for other countries. And the solution for that would be, of course, either more fiscal integration or a clearer national fiscal responsibility. But it's a debate we have been used to here for a while.
Would it be, though, inappropriate for those countries that have the space to spend money in order to help those that don't?
Well, again, the question is, does this really help? I mean, how large are the spillovers to other countries? And the calculations that we have done here at the bank highlight that these are rather minimal. I mean, if you construct a bridge here in Germany, does it really benefit other countries to the extent warranted? And I would say that's highly unlikely. But of course, there is a case for investing more in Germany. Also, targeted public investment is certainly a discussion that we should have.
Certainly, if one drives on the Autobahn, you understand those demands as well. If we can get to the markets for a minute, because they're dropping precipitously now, and it has been, as Alex was saying, the worst week since 2008. I mean, 2008, that was the great fiscal crisis. How concerned are you?
Well, I think that highlights how uncertain the whole situation is. It's very difficult to really judge what the economic outfall or the economic effects of the coronavirus will be. And that is reflected in a flight for safety, and also in the effect of the stock market that you just highlighted.
Is it a time to rethink, the economic cycle? Is it a time to rethink globalization?
Well, it's probably underlining how vulnerable we are because we are so intertwined. But that's not really new. I mean, we noted that before. I mean, that's also not the first epidemic that we are observing. I mean, think of the SARS discussion at the time. So it just highlights how interconnected we are. And my understanding also makes the case that, in a sense, we have to preserve trade relations, and we have to make sure that we not artificially hamper those movements of goods and also services through further restrictions.
You talked about in the press conference and here briefly also your concerns on the demand side. Certainly with these kind of drops, 10, 13% drops in stocks in 1 week, does deflation start to concern you? Do people start to say, you know what, I don't want to spend money on anything?
No, as I said, the effect of the coronavirus on prices is far from being clear. I mean, you mentioned the disruption of global value chains, and this means that goods are getting more scarce. You see this already also in China. Some of the goods have registered increasing prices. So
you think it's more likely to lead to inflation?
Well, that's not what I said. I said typically a negative supply shock will lead to a rise in prices. But we have here a combination of a negative supply shock plus a negative demand shock. So the overall effect on the inflation rate is far from being clear, and that's why we have to monitor the situation quite carefully.
In terms of inflation, I know you're debating what to do internally about the targeting. You were talking about your aversion maybe to symmetrical targeting in the press conference. Do you think it would be better to have a range?
Well, I just say that our strategy has to account for the uncertainty that we are facing. That's one. So we need to have some flexibility in reacting to very different shocks that we are confronted with, for instance. At the same time, it has to be forward-looking and it has to be understandable. Those were the points I've been making.